This is Team 303 and we are here to present our credit research report on Bharti Airtel Limited. Bharti Airtel Limited is the second leading mobile service network operator in India and third leading mobile service network operator in the world. It was founded in 1995 by Sunil Mittal. In the early 2000s, it acquired Skycell Communications and Spicell Communications. Initially, it was venturing only into mobile services, but later they ventured into other services as well. In 2008, they launched the DTH services, and in 2014, they launched the Wynk Music app. Apart from the acquisitions in India, there were certain acquisitions in Africa as well. In 2008, they acquired MTN Group from South Africa, and most of these acquisitions took place after 2010. The global presence of Airtel Limited is such that it mainly operates in Asia and Africa. In Asia, India, Sri Lanka and Bangladesh contribute to 70% of the revenue, and in Africa, it spans across 17 different countries. Apart from these countries, Airtel also operates in Japan, Hong Kong, Singapore, USA, UK and France. Now we will be talking about the shareholding pattern of the company. 67% of the shares are held by the promoters. This helps in easy decision making, and 18% of the shares are held by financial institutions, followed by UTI, mutual funds and other investors. Now we will be talking about the business overview of Airtel. Airtel offers various services. Mainly they venture into mobile services from India and Africa. In India the market share is 30% and in Africa the market share is 60%. The other services provided by Airtel are home services. In home services they offer telephone and broadband services. They launched the DTH services in 2008. In 2016, Airtel's Payments Bank was launched. It was the first company to be given a payments license by RBI. The other services offered are tower infrastructure and Airtel businesses. Now we'll be talking about the business model of Airtel. The business model of Airtel is a continuous cycle and it focuses on acquisition of network infrastructure, mainly towers, broadband and optic fiber networks. They use these digital tools to provide services to their clients. They also acquire towers and they have a collaboration with Vodafone and Idea. They have a joint venture called as Indus Towers. The sales and distribution channel are the retail partners and their own stores. The revenue thus generated and the profit thus made will be helpful in maintaining the ecosystem of the telecom industry. Airtel is diversified into 6 different segments, which is basically mobile services from India, Africa, Airtel Homes, digital TV, tower infrastructure and Airtel businesses. In mobile services India, the revenue has substantially dropped in the last year. This is because of constant competition and many of the Airtel users ported themselves to Jio. In mobile services Africa, the revenue has also dropped in comparison to the last year, but we expect a positive outlook from Africa because there is a stability of commodity prices and the smartphone penetration, which was at 20%, is expected to increase. The ARPU, which is average revenue per user, which has been decreasing since many quarters, is expected to decrease further. The Airtel businesses has grown. This is because Airtel has focused in their B2B platform and they have also planning to digitalize Bharti Airtel completely, and they are also focusing on their OTT platform. Tower infrastructure has also increased. This is because the subsidiary company of Bharti Airtel, which is Bharti Infratel, owns these tower structures and they have reported an 8% annual growth in the revenue. Further slides will be continued by my friend. Thank you.
So now let's look at the management and corporate governance of Airtel. Next slide. The company is owned by Mr. Sunil Mittal and there are 2 MDs and CEO, one for Asia and Africa. The Asian continent is managed by Mr. Gopal Mittal and the African continent is managed by Mr. Raghunath Mandava. There are 4 non-executive directors and 6 independent directors. Next slide. These are the committees of Airtel. There are various committees which performs various functions. The first, the risk management committee, they basically manage the risk, mitigate the risk. HR nomination committee, their function is to attract and retention of employees their benefits and their compensation. Shareholders Relationship Committee. This committee basically manages the shareholders' redressal and their complaints. CSR committee, they basically formulate the CSR plans, formulate budgets, prepare budgets, and then allocate this budget and review the performance of the CSR with related to the company. The Committee of Directors is managed by the company secretary of the company. Auditing committee, they manage the financials of the company and broadcast them to the public. The next slide. These are policies of Airtel. Some of being very important, like appointment of directors, CSR policy related to the party transaction. The company has been awarded by CRISIL, that is GVC level 1. CRISIL, one of the top credit rating agency in the country. Company is also awarded with Golden Peacock Award in corporate governance. The management is included sector specific with IT, telecom, with loads of industrial experience and international exposure. The participation in board meetings in last financial year has been approximately 75%. Let's look at the industry review and competitive analysis. These are the competitors of Airtel in India as well as the international competitors with their current credit rating. Next slide. With related to the revenue of revenue market share of Airtel, it currently stands second in the market after the Vodafone and Idea merger. With 30.9%, it is growing at a steady rate, and the closest competitors are obviously Jio and Vodafone and Idea. The revenue is expected to grow at $26.38 billion by 2020. Next slide. These are the financials of the Airtel. EBITDA being decreasing at a considerable rate indicates there is a declining operational efficiency. EBITDA margin declining at 2% from financial year 16-17 to 17-18. The return on assets is increasing by 2% to the financial year 16-17 to 17-18, while the return of equity is decreasing by 3%, but the market average is around 3.5%, which 6%, which is lower than what Airtel is. Next slide. The debt to equity, there is an increased debt to equity ratio, but PAT margin has considerably decreased from 12.9% to minus 15.93%, which is a huge loss for them due to various increase in financial costs and exceptional costs like levies, taxation, and there is change in exchange rate system. The return on capital employed, this graph has been volatile for the past 3 years, and this is due to the capex of around 24,000 crores, which has produced a negative productivity of around 30%. Thank you.
So now let's have a look at the financial risk analysis of Airtel. Next slide. So as we can clearly see, the revenues of Airtel has been consistently declining over the last 3 financial years. A major reason for the steep decline in particularly financial year 17-18 is their loss in India operations, wherein the revenues declined at a rate of 13.5% only in the year 17-18. Also, when we look at the PAT levels are also declining, and in fact they are expected to further decline due to high intensity pricing pressure from competitors over 4G and 5G pricing. Airtel is also struggling with maintaining its ARPU, wherein they have already lost around 5.8 million consumers to its competitors. When we have a look at the total indebtedness ratio, first of all, this is calculated by dividing the total outside liabilities of the company to its tangible net worth. As you can see, it lies at a minus 3.66 level. The negative scale indicates that the company has negative tangible net worth and high reliance of intangible net worth on its balance sheet. When we have a look at the ROCE is consistently declining at a rate of 3% over the last 3 financial years. Debt service coverage ratio, one of the important indicators of debt coverage, also has a declining rate over the last 3 years. In fact, if we have a look at the financial year 17-18, it is only 0.22 times in the financial year, which is less than 1 year, less than the industry standard. So this shows that the company is clearly not able to service its debt, be it in principal or interest payments yearly on a yearly basis, purely by its operational earnings. Again, when we have a look at the interest coverage ratio, that has also been decreasing from 7.06 times in a year to significantly lower at 4.37 times. Although this is higher than the industry average of 2 times, this is still a negative aspect for Airtel because interest coverage ratio denotes how many times the company is able to pay off its interest in a year only with respect to its earnings. So that has also been declining over the years. When we have a look at the net debt to EBITDA levels, that has been increasing at a rate of 1.7 times year on year. This is mainly because of the high debt infusion each year and the high reliance of debt for capital expenditure programs by the company, which is not in line with what the company is actually earning year on year. Net accruals to total debt has been significantly volatile due to the fluctuations in net cash accruals. It currently stands at 14.8%, which is still lower than the industry average of 18%. Now let's have a look at the capital structure. At present, the debt in the company stands at approximately rupees 95,000 crores. The equity stands at approximately rupees 69,000 crores. We can clearly see that the debt to equity ratio has been increasing at presently 1.37. This is again because the assets of the company are highly leveraged. They are mainly dependent on debt for their capital expenditure programs. And also when we have a look at the debt breakdown, we can clearly see that the majorly dominated debt is in the form of term loans, followed by non-convertible bonds, then non-convertible debentures, and finally commercial papers. In addition to this existing debt, the company has also issued rupees 16,500 crores worth of NCDs to refinance their debt, which is basically to pay off their existing liabilities and also to pay off their spectrum related dues. So the debt to equity ratio is further expected to increase over the years. When we have a look at the liquidity cycle of the company, the current ratio stands at 3.6 times, whereas the quick ratio stands at almost 0.4 times. The cash to current liabilities has significantly increased, mainly because the company has sold off its assets in its African operations to meet its current liabilities. The net working capital cycle denotes a minus 200 days, a negative 200 days. Basically, it indicates that the company doesn't require heavy investment in working capital. Also, when we have a look at the receivables and payables turnover cycle, we can observe that the company enjoys a comfortable credit period.
Now I'll be talking about the investment summary. This is basically the rating history of Bharti Airtel. 3 agencies have rated Bharti Airtel, namely Moody, Fitch and S&P. As you can see, all the ratings have been negative. Moody gave a negative outlook of BA1. This is because they feel that they are very uncertain as to whether the company's profitability, cash flow situation and debt levels can improve sustainably and materially. Now this is the latest rating that is available, which is why we will take this into consideration. Now our rating rationale is basically based on 5 factors, which is liquidity risk, financial risk, business competition, capital structure and management and corporate governance. Management and corporate governance is a positive indicator because whatever are the policies designed by the management, it will help in the investor relations as well. The liquidity risk is a moderate indicator as the increased liquidity ratios indicate that there is strong short-term liquidity, but the remaining three indicators, which are capital structure, financial risk and business and competition, they are negative indicators. This is because with respect to business and competition, there is healthy competition in India currently prevailing, which is why we see a negative outlook over there. In the financial risk, the EBITDA and debt service coverage ratios may continue to decline if capex productivity and cost of borrowings aren't lowered. Based on all these parameters and also according to the KMV model, the distance to default is at 7.48 and the probability to default is at 3.4%, which is why based on all these parameters, we believe that the rating should be downgraded to BB negative with a negative outlook. Thank you so much.